Welcome back, guys, to YBR Capital. Today we're going to look at Q3 earnings of Facebook. A little late for a reason, but before we get into that, just to point out to the folks who had made some comments on my Q2 analysis of Facebook that will I put my money behind my own analysis? Well, here you go. So since I was negative back then due to the issues identified in that clip, check it out if you want to. I opened a put in September, and year to date, as of today, it's up 75% in 60 days. So not to brag, but yeah, my analysis was on point, and I do put my money behind my own analysis. So moving on. So Facebook, we opened the position back in September. As you can see, it was around $170. And it went down, and it's nearing 141 today. So the reason it's only down 20%, but my profit is up 75% is because of options. So I'm not here to teach you options, but if you're really convinced about your analysis or the report you got and you want to go gung-ho about it, you want to play with options because that's a money multiplier. I'm not here to teach you options, but if you guys want, let me know and I'll might make a video about it. This is a venture capital channel and all about technology. So if for the casual users, if you look at my technology videos and make some money like this is just an example of how I do it. And if more power to you and more reason for you to come back and listen to my beautiful voice. And let's talk about why we came here. Facebook Q3 earnings. So giving, as you know, I like to give the pudding or the cake before we get into it. So there's three takeaways you need to get from this presentation or this clip. Is daily active users have peaked in US and Europe. So the majority of Facebook's user base is USA and Europe. They're the most profitable, they're the most stable, and they've peaked. Why is that important? We'll talk about that later. Operating cost will increase as security and legal scrutiny will increase. So basically your cost of doing business goes up. So when that happens, you spend more money on stuff that is not revenue generating. Hence your margins goes down. We'll look into that too. And three, there's only so much revenue of Facebook user can be extracted from. So right now they're doing a very decent job. They're best in their industry, but there's only so much that they can extract more out of it. So the future growth is not there, and therefore the summary of this presentation or this analysis is that Facebook is no longer a growth stock. One, because daily active users peak. Two, because the costs are going up. And three, the ability to generate revenue out of each user is maxed out. Hence, it might be a value stock, and value stocks do not trade 30 times or 15 times or 20 times in multiple. They trade between 5x to 10x. So Facebook terminal value or the real value that it should be trading at, if it's a value stock, will be around 100. So there's another big dump of stock selling that's about to happen. So if you own Facebook and you're still in the green, then maybe it's time to take some off the table. If not, then from a venture capital technology enthusiastic point of view, learn from their mistakes. Again, they moved too fast and they took too much risk, and morally they're corrupt. Okay, so moving on. Daily active users. So as I've identified before, US and Europe are the stable base. But you're like, whoa, wait a minute. What do you mean by that? Like, why are you focusing so much on US and Europe when Asia and rest of the world is so volume-wise much bigger? Well, there is a reason behind that. Is because of the revenue potential. So before we get into that, let's look at US. It's been 185 since Q3. Europe, as you can see, it's been stagnant since like Q1 2017. The main growth is coming from Asia and the rest of the world. So from a daily active user, if you just look at the big picture, yeah, Facebook is expanding, it's making sense, but can they repeat what they did in the US and Europe to what they did in Asia and the rest of the world? I don't think so. Why? Let's talk about that. So the revenue is all coming from advertisement. So advertisement is 98% of Facebook revenue. Keep that in mind. We're not going to go into this because this is just gives you a bird's eye view of how important advertisement revenue is. So if you look at the geography now, this is how you tie the daily active users to the geography. So the geography, if you look at it, in the US, we have the maximum amount of revenue coming from our users. Next is Europe, and then the rest of the world is basically 25% of the revenue that Facebook is getting in Q3, and that pattern has been the same since 2016. So Europe and the US account for 75% of the revenue, whereas rest of the world has been 25%. So your users are growing in Asia and rest of the world, but the revenue is growing in has been the driver in the US and Europe. So if you look at that, so advertisement revenue, as you know, 98% of Facebook advertisement revenue comes from advertisement. So if you look at it from a geography point of view, US and Europe account for majority of the revenue. So there is a direct correlation between the user in Europe and US and the revenue that is being generated. So advertisement is more local than global. So a US advertiser will focus on US consumer and a European advertiser will focus on a European consumer. The reason for that is because the ability of Facebook, so the value proposition of Facebook is its ability to create slices of its user base and provide pinpoint accuracy on the interest and geography of the user. So if I go to, let's say, Google, or if I go to an advertisement agency, or I go to Economist, a magazine, they give me a broad spectrum of users, a user persona, but Facebook can identify which zip code they are in, what they look at, who their friends are, what they look at. Based on that correlation, they can give you a very good consumer persona at the local level. So Facebook is fantastic at the local level advertisement, but Facebook is not as good as for a global level campaign. So most of the advertisement revenue that Facebook gets is at the local level. So if you want to target somebody who wants to buy a Lexus in the Bay Area, Facebook is amazing. But if you want to do a brand campaign, developing a brand of a new Ferrari, then Facebook is not the place to be. Those lifestyle magazines will be the place to be. So that is your user base, your use case, your value proposition. So now this is the most important slide we need to look at, is ARPU, average revenue per user. So the jump in the stock that you guys saw was because Wall Street said that we were able to squeeze out $27.61 out of each user, and that's an amazing feat. But I don't think that's sustainable, because we are basically trying to get blood from stone. And as you see the correlation between your revenue, your user base, and ARPU. Now that's the whole picture. And there's only so much revenue the US folks can be squeezed out. The main growth in user base is coming from Asia and the rest of the world. So if you look at that, it's been flat, and there's not much scope in it, because advertisement revenue, majority of it is still a Western Hemisphere thing. So the future forecast for the next 2 quarters is that the stock price is going to go down. And again, if we don't focus on the stock price, because if you're talking about technology sector, what Facebook has to do is has to reinvent its user base. So it's going to move away from the core platform as in Facebook and have other platforms. So that's why Instagram is very important. But the execution of Instagram to kill Snapchat is working, and that's why you want to be negative on Snapchat. But it's now going after YouTube. So having Google and Apple come into the same space and Amazon coming into that, the pie is being squeezed. So before it was a monopoly, but now the pie is being squeezed. So that's where you will see that margins are going to be squeezed. So that's how you connect the whole story. So you've got your revenue story, you got your user base story, and now that since they're being squeezed both by competition, by regulation, the expenses are going to go up. So the trend you're going to see is the cost of revenue. So basic cost of revenue is how much does it cost for you to acquire, sell, and service a user advertisement and a user base. So that's going up. Then the G&A is going to go up because they'll have to hire more non-revenue producing folks. So revenue producing folks are people who are marketing, people who are in sales, who are product development. These are revenue producing, and that's what Facebook employee profile has been. Majority of them has been revenue producing, but now you have to have the lawyers, the contractors to look into the content, policing the content, more finance guys, more admin guys, and they are non-revenue producing. And as the company gets big, they've got away with being pretending to be a startup for a long time, but now the G&A part is going to increase and more scrutiny is on them, so they have to spend more on that. So margins are going to be squeezed. Again, the income from operation has stagnated, and with the increase in margins, that's what's going to happen is you can see the margins are getting squeezed from 57, it's gone to 42, and the guidance that they gave in Q3 is going to be 36%. So they're spending a lot on data centers, they're spending a lot on fiber optics, they're spending a lot on infrastructure, and they're spending a lot on compliance, and that's going to squeeze the margin. So in the short term, you can expect the stock to go down. So there's talk about it going from a growth stock to a value stock. What's the value with all this scrutiny and competition coming in? Will they be able to sustain? They've been lucky that they operated in a vacuum, and anybody can hit a home run in vacuum, but now that there's so much spotlight on them, will they be successful? So guys, hope you enjoyed the presentation, and make money and be good.